Hey traders, what's going on? Jamie Saettele here. It is September 14th, 2016, and welcome to the Midweek Strategy Webinar. We will get started with a chart of actually the Dow. So, I did that long-term study on the Dow Jones Industrial Average, the special report that was published in August, making the case that we could actually top on August 16th and go down until the first quarter of 2018. And so far, obviously the top is on the 15th. And, with the recent action in the equities market, it could be actually on track to put in some sort of a big top. So, at times, Adam, what's up? Good afternoon. At times, you've got clarity, say maybe in the S&P or the Russell or the Nikkei or the DAX. Sometimes it's the S&P futures, which would be the 24-hour market, right? Maybe sometimes you got clarity in the the Dow here or the S&P, which is just the regular trading hours. In other words, just U.S. session. So what we're looking at here then is a chart of the Dow. There's a question here. Ken Wall says, hello, how are you, crude and dollar yen? Yes, I will go through the markets here first that I'm going to plan on talking about. And then if anything is not answered as we get into your question, or at the end, I'll go through some other questions. Okay, so let me go through what I planned on talking about first. All right, so what we have is a possible fork to deal with or to work with right off the top. Okay, you're basically going from the July 20th high and using the 22nd high from August. All right, and you do have some good touches on this. You've got, the median line doesn't touch these lows, but you've got a parallel that does. It crosses both. I would essentially be looking at this area now as resistance, right? So even if you're trading, say, the S&P, maybe the S&P isn't so clear, right? But you want to know where there's resistance in the stock market. And in this case, I think you might be actually looking at, resistance up near 18.2, about 18.190, 18.200. Okay, so we're 18.1 right now, so you're talking about 90 to 100 points is where I'd be looking for resistance in the Dow over the next day or so. All right. Now, as I tweeted out this morning, you might actually have support down at, say, 17.930 or so. All right, and that's just the lower parallel from this. So, just for instance, as an example here, if we take the S&P 500, here's the hourly chart of the S&P 500. You don't have, hold on here, it's going to change because the futures roll over. All right, so this is the trend line down here. If you look at this chart, you can see that you don't really have, there's not, I guess you could draw this in. Let's see what this looks like. Not really much of, touch points on those, right? You might be able to look at this median line here. It's kind of a stretch. It would put you, looks like about 2143, which would be, 17 handles on the upside. So, irrespective, we've got the longer term stuff that we're talking about, obviously. The big broad picture, but as far as timing and trades are concerned in the S&P 500, if you are trading the S&P 500, then the very short term slope leaves a little bit to be desired as far as trading is concerned. Going back to that Dow chart, what I'm thinking here is that you could actually have, this could be a 1, 2, 3, 4, you could end in a 5 down here at some point and then get another rebound, and that rebound would be the really big sell. All right, this might take several days or even a week or so to actually happen or to set up. But this is something to track and keep an eye on. All right, let's move on, getting into FX. We've got the US dollar index. Pretty simple on this one. This is, just the US dollar index, and the 12,000 level is as big as it gets. Here we are again, halfway through a month, and we are unchanged on the month, right? Seems to be the story of the last year plus. Seems like every time I do one of these webinars, we basically have the market unchanged on the month, right? So if you look at, you can see these monthly opens, right? These are the monthly opens, these little dots right here, right? So you've got, June right here, July right here, August, September. I mean, they're all really close. This does suggest that eventually you're going to have a massive breakout. Again, I still don't know. Obviously, no one knows for sure which way it's going to be. I keep thinking it's going to be lower with the dollar, again, based on the long-term cycles. And just the fact that I seem to be in a pretty lonely state as far as the dollar bear case is concerned. I'll give you an example. So there's a magazine out there, a trading magazine, and they wanted an article. So I said, okay, sure, I'll give you, I'll write you an article. Well, so I wrote an article for this magazine. I think it comes out in November or October or something. I don't know. And the guy's like, he's like, you sent me a bearish article on the dollar. I said, yeah. He's like, huh. He's like, everyone I talk to seems to be bullish the dollar. I said, oh, well, that's interesting. Well, that kind of, I guess thinking, if you will, or that knowledge, the fact that everyone's supposedly, bullish the dollar or whatever, it interests me just from a contrarian standpoint, right? So again, that doesn't, I don't really, those terms like everyone's bearish or everyone's bullish, whatever, what does that mean? But it's a good indicator of sentiment, right? If he's talking to all these other authors or, strategy people or whatever, strategists, analysts, what have you, and they all are kind of on the same side, to me, it's a pretty good indication that maybe the other side is the one that's going to win out, right? Does it happen right away, right? I can't say, I don't know, but it's another piece of the puzzle, right? So we've got the 200-day average here again, 200-day average, lots of 200-day average plays in the markets or in FX right now, because just that's a function of how, a lack of trend over a very long period of time, right? But, this is a good average. I mean, just for a reference point, okay, you've got, support, resistance after Brexit for a time, broke through it. Everyone got really bullish again. I kind of questioned what the hell I was doing. Broke down, and then it's been resistance again. So here we are, resistance very early or late in August, early September, and then we're right back at it. So, today's high is 11,997. Again, you've got the month open at 12,001. 200-day average is 12,001, and slope. And I think this is actually probably the better one to look at slope-wise. Remember, I had and this is something that I say to everybody, or to anybody that will listen or that wants to listen about, about trading and analyzing the market, right? It's not that I use pitchforks because they're pitchforks, right? It's not like there are pitchfork guys or pitchfork analysts and strategists out there that really do, kind of take the pitchfork thing to another level, right? And there are different, there are different methods, which I talk about some, but I'm not necessarily using the pitchfork just because it's the pitchfork. It's to help me find the slope of the market. So in this case, right, this looks interesting, right? You got this here, you got this here. Okay, this one might be a little better, right? okay, because you do get the more touches on the median line. But at the end of the day, which one's probably the best is actually probably just the trend line, right? Aha, right? And then look at that one. Aha, see there? So this is what I think, might be the best thing to follow, okay? So point of this chart is just, really important, that 12,001 area, right? And remember, this is euro, Aussie, pound, and yen. And as I go through the dollar charts here, you'll kind of see that I don't really have a full-on, still, I've been talking about this for a couple of weeks, I don't necessarily have a full-on, say, like strong dollar, near-term trading bias. Like I want to be long dollar CAD, right? On the breakout, short Kiwi here, which we are, stuff like that. Willing to be both sides of the dollar depending on the other currency that it's being traded against. So let's go to euro real quick. There's really not much for me to say on this. Again, euro is getting really quiet, coiling up, right? Hopefully coiling up for a move to the upside. I don't know. We'll see. It's still possible, again, as noted last night, that you do get into, maybe support down a little lower. Okay. I don't know. We'll see. I do like again, going on the short-term charts, 5 waves up on this, 3 waves down, right? 60-minute chart. You can see it here. 1, 2, 3, 4, 5, A, B, C. But since then, it's kind of a disaster. So you could end up with, A, B, C, A, B, C, and then a 5 wave down lower, right? Which would essentially be your larger A, B, C. Okay, so that's still a possibility. So I mean, if you were a longer term trader, you could be along the euro right now with the stop down here below 111.22, which is the low. Maybe you'd stop at 111.13 or something. And that would be a fine longer term position. If you've got, don't forget, we do have this working in our favor. Both analogs, right? The 1998 one, which we had followed, this is still, definitely still worth following. It does suggest that we are on the verge of moving higher, as does, of course, the 2002 one. Maybe it needs to play some catch up here relatively soon. But yeah, they, both bullish, and we are in a record period of ranging, right? For those unfamiliar, this is just what you're looking at here is the period of the indicator on here is the period of weeks between 52 weeks, a new 52-week low and a new 52-week high. All right, so essentially, long consolidations, right? The ones that take a lot of time are going to lead to the really strong moves. And in the history of all the major currencies, okay, this is one of the longest ever. We have now surpassed the length of consolidation that it took from 2000 to 2002. Okay, that's very late 2000 to early 2000 or May 2002. To give you an idea, the only longer consolidation amongst the majors is actually the Aussie. Okay, and the Aussie dollar consolidation took 94 weeks, okay, of sideways before that breakdown occurred. And guess what? This market still has not made a new 52-week closing high. In fact, this is the longest, one of the longest downtrends in the history of anything. It's been 268 weeks. So if you're just defining a downtrend as without making a 52-week high, Okay, so 268 weeks. It's the longest you've ever had for Aussie by a pretty wide margin. Okay. So the cycle is, I guess, long in the tooth, to put it lightly. Okay. All right, so that's some interesting stuff. So again, with Euro, trading-wise, you could still get, again, A, B, C. I would watch 1284. It's just, it's the high up here, 99 high. 1306 would be your hourly reversal resistance as well. So those are two spots, as talked about a bit on Twitter and in the reports. 112.56, that's your 9/6 close. Remember, that's the ISM, really crappy ISM day, when Euro really ripped. The dollar just really tanked in general. So that's a big, area. It's just a high volume area. So on a daily close basis. All right. So, I'm really bullish Euro. But as far as the actual tactics for entering the market, it's still possible to actually get a drop back onto this line down here. Okay. And just for fun, let's see where, let's say for argument's sake, let's say that we do end up completing, an ABC correction at 1284. You would actually get two equal legs at 1155, which is the month open on the nose. That could be interesting, couldn't it? Okay, so there's Euro. Let's look at pound. So pound, and this is a good example too, I think, of maybe how to use the service. I'm assuming that most of you were on Twitter, and on the private Squawk, our private Twitter, the SB Squawk Twitter feed. And hold on for a second, I've got to sneeze. Sorry, excuse me. So with pound, as you know, I've been kind of looking for, we were long pound for a bit, right? And we got out. We had a good trade. We got out, I think, back at back here somewhere. And since then, I've kind of been wanting to thank you, Wesley. Since then, I've been wanting to get back into the trade, right? I do like pound. And when you look at it on a daily chart, it looks a lot better than if you're looking at it on a week or on an hourly chart, right? Like here's the daily chart, right? So especially if this day finishes like this nice little pin bar down here, monthly open right here is low tick here today, right? So when you see something like just the monthly open itself, and especially in these kinds of range environments, it does give me kind of just I might not have a strong opinion or setup, but just the it's something to scalp off of, right? And when you throw in or add in the fact that you've got two equal legs, okay, at 3140, right, here, it gives you reason enough to just be kind of maybe just take a long at the position with a tight stop, right? Now, so for a swing setup, so tonight when I write, I'll say that we came into two equal legs. We had the month open. We've got just good support to be bullish on, right? It might be worth just putting a little, putting an entry. Will probably do it. Say down here, 3165, make it 3170. Stop down below 3130 or so. Okay, and then look higher from there. Okay, so you've got, it's kind of the anatomy of a trade setup. Like you've got, the short-term stuff, and if you're a short-term kind of flow trader, you need to know where the big levels are, and that's really all this is, right? And then if you're maybe more looking to trade swing like myself, right? Maybe more plan things out, to manage your risk a little better, then I would be looking, to maybe establish support like we did, and then take it and put an entry, down where I think, decent support is. Wesley with a question, what's the first target to look at for swing? So the first target to look at for swing, Wesley, is just the week open. It's 32.63, okay, right here. Okay, and 32.63 would also be pretty close to the underside of the trend line here, okay? So it's, it's right up here, 32.63. All right, that's the weekly opening price, okay? And in these markets that are, fairly quiet, you're going to get pretty good, you usually get pretty good responses off those levels. I mean, you saw the month open here, how that worked, but 32.63 is the weekly open. Very generally speaking, I mean, you do have kind of some former highs around that region, right? So that's what I would be looking at. It's a good sign. See, this is the 20-day average in purple that we are more or less trading at. So it's a good sign that we, if we can hold up at that, it'd be a positive. So that's pound. Again, with pound on the daily chart, I like the idea of just kind of being, bullish, having an entry in overnight, which I'll, almost certain, assuming we hold up like this, almost certainly put it in tonight, and then 32.63 would be a first area. Follow, just simple daily highs and stuff, but 33.70 has been obviously a very, very well-defined horizontal level, right? So Wesley or anyone else that's maybe trading pound, I mean, 33.70 right here, here, here. Okay. Moving on. So this one might shock you with what I'm about to say, but Aussie dollar, I'm actually looking to get long soon, I think, assuming that we get to a certain level and hold it. So, as you recall, this is the really, I think, solid slope line, right? And again, this is another example of identifying slope, not necessarily using a pitchfork, although in this case, it's nice that you have a bullish fork as well, off of the lows, right? Here and here, which is more or less the trend line, but you get it. So we are coming into a really big spot. You've got the December and October highs up here at 73.80, 73.84, low 73.80s, right? And it's a really big area. 200-day average is right around 74. You've got the lower parallel slightly above. I would not get upset if the market went down here. I would have no problem with 73.80 getting hit, but I don't want to see the market get much below there if I'm going to actually be bullish for Aussie dollar. Already two equal legs. So what we're looking at with Aussie as well, and check this, if I take one of these parallels, okay, January 2015, okay, couple hits, right? Resistance here, good high, March 2015, good high, June 2015. And then it kind of cuts through a bunch of crap. It was actually support for the takeoff in July, and we're getting right there again. The analog for Aussie is super interesting, as you probably know. Aussie dollar does suggest here that we should be making a low really soon. Okay, so obviously again the scale is very different, but the times between the turns here um, is Sushil asking, where do you take profit? Sushil, what are you referring to as far as which currency pair are you talking about? The Aussie. Take profit on which side? Are you long or short? I'm not sure. I'm not even in a trade right now for Aussie. I'm just saying I'm looking. Okay, long. Well, I'm not long right now. I'm saying I might not be long. Okay, I would like to be long if the market gets down into 73.80 or 74 and holds up at that region. That would be a very good place to get long, in my opinion. So let's say that we get down into 73.80, 74. Okay, you would be looking for a bounce, and according to the analog, you could actually get a bounce, and then get another dip. Okay, so if we were to do something like that, a partial bounce from 73.80, 75.70 would be a very obvious level. Okay, it would be about half the decline actually. Okay, so 75.70 to 76.15 would be a solid level to pay attention to if indeed you were going to get a rebound off of 73.80. But all I'm saying here is that 73.80, 74 is very big and a big level to watch for a really big low. Okay, so that doesn't mean that you back up the truck and buy everything you can at 73.80, although that might work. All right, so Kiwi, I am short, and essentially it's come into resistance. Again, here's the, if this is going to work, I really wouldn't want to see it much above, say, 73.16, 17, which is the weekly opening price. All right, we monthly open, weekly open. So we've bounced off a pretty good level. Talked about, this is the chart from last night. The monthly open 72.47, the median line here. We've rebounded, we're looking for that rebound, and here we are. And if we end up breaking, we'll be looking for 71 or so, which is again just the the parallel that was support in July. And remember, we do have quite the divergence with Kiwi, right? This is the weekly chart. So this was published on Sunday, and we do have this divergence, okay, which can indicate some pretty big turns, right? It's you had the divergence 3 weeks in a row up here in July of 2014 before you finally got the turn. You had divergence before then. Going into the top in 2011, it would not have worked. Okay, you would have had some minor pullbacks, but you would not really have had much of a short there. The top back in 2008 was actually a divergence, and you would have not worked really here. Although I worked on that one, but wouldn't have worked on the rally through 2007. Would have worked on a bottom in June. So you can see, like any indicator, it's going to work. Sometimes it works, sometimes it doesn't, right? But when it works, it tends to really work. So that is Kiwi, and one reason why I kind of want to be short, despite the fact that we might actually be bearish the dollar, right? So you can see there's kind of all over the place with the dollar at this point. All right, let's move on to dollar CAD. Dollar CAD, here we go. All right, so we talked about the triangle. And again, what was one of the let's see, get rid of that stuff. One of the, kind of the tells, if you will, that we were in a triangle, right? So we had suspected that we could have something of a triangle for a while. We had the big rally off the May low. Remember, you're coming off of super clean slope. So even if we get a breakout, we might get a breakout like up here. We could fail, right? You could fail up near 33.70 or even 34 if it, takes a while. Just because of this, right? That line here, which was such a great, support in October of 2015. How, interesting would it be if we topped on that line in October of 2016? Okay, and then it was resistance this year in May. Didn't quite get to it in July, but something to really be aware of. But the next move, in my opinion, is still to be a buyer on this. Okay, and here's why. So you've got the big move higher, wave A. All right, we got small wave A. Okay, small wave B, small wave C, small wave D, small wave E. Now the thing is with this, you didn't really know what the hell was going on until kind of the very, very end. And that's the case a lot of times with Elliott stuff, and there's nothing wrong with that. Okay, that's okay. It's fine to be like, I don't know, and I don't know what's going on right now. But once you see it, right, it just clicks. Okay, once you can count it, I like to say, if you can count it, then it's done. And I mean, if you can count it and like just look at it, and in 10 seconds, you're like, that's it, right? Not this sitting there and forcing it and saying, well, this might be, A of X of Y of 2 of 4 of Roman numeral, no. I'm saying like this is clearly A, and then we have a contracted range, which is a triangle, with wave B above the origin of A, which is actually quite common, and our BD trend line has been broken. Okay. And that BD trend line is actually probably where we probably want to end up buying it at around 31.03, which is the month open. Okay. So going back to the tell on the triangle, right? A lot of times triangles the alternate legs will relate by 618. Maybe not all of them, but a good deal of them. So in other words, wave C will relate to wave E by 618, and sure enough, it's almost spot on, right? Okay, see here to here, that's equal to 0.618 of this. Okay, wave D will relate to 618 of wave B, and sure enough, it does, right? This is equal to 0.618 of this, right? So we've got those two legs that are equal by 0.618, right? Now in this case, wave A and wave C are not going to be equal by 0.618 because, most likely, they're not going to be, at least, because you do have, an expanded, a longer B wave. In other words, you've got kind of a where B is above origin of A, right? Running triangle, so that's not going to happen. But trading wise, we at least can say now that we've got, wave triangle wave B, kind of in, underway here, or complete at least. And then the tactics of the trade are totally different, right? This is your breakout bar, and we're saying that if this is indeed the right slope, which it has a lot of beautiful touches. I mean, the median line's been something else, right? We've been trading around it at some big tops. Obviously, the trend line touches it perfectly. And then this is really the kicker for me. You can see the parallel that crosses through these resistance, and then that pullback that we had on Monday. It stopped literally right at that level, right? So to me, if we are going higher in wave C, which again could fail near 134, okay, but the wave C target would be 135.47. Why? Because that's where wave C would equal wave A. Okay, you take wave A, extend it from wave B, and that's what you get, 35.47. The support here is the breakout of the triangle, okay, which is again in line with your 3103 month open. Okay, so that's pretty much it. That's the explanation of dollar CAD. That's the setup. If you were to look at this too, 50% retracement of actually the decline from January to May is also 135.74. So you do have a very solid, target and slope and everything to work with here, right? Now, if we look at, I remember yesterday, last night's post, we talked about the, hold on, see something here real quick. What the hell is this thing doing? Kind of, all right. If we talk about remember the exhaustion indicator, right? So I said I'd talk about it real quick. I know a lot of you are probably already familiar with this, so I won't take long. But the exhaustion indicator, it's essentially a number line. So what you do is if you're looking at, say, this is how I use pivots, right? So pivots, right, where you talk about like R1, R2, R3, these are the calculated floor pivots, right? So you have 3 supports and 3 resistances, right? Well, I will then count. What I do is assign a value to each day, okay, as either, it could be anywhere from +3 to -3. So if you hit one pivot that day, it's a +1. This would be like a +1 day. This is a +3 day, okay, because you get 3 in a row, or all 3 of them. This would be a +1 day, and then yesterday was also a +3 day because again you hit all 3. So what happens is that you add up the last 3 days, and that will give you your indicator value. Okay, and the indicator value for the last 3 days is 3 + 1 + 3, which is 7. Obviously, the highest it can be is 9, and the lowest it can be is -9. But that's extremely rare. I've seen a 9 like registered one time ever. That was actually in August 2015 in the Dow Jones. But this chart is, the blue is telling you when the market is a reading of +7 or more. And the red is telling you when it's a -7 or more. And a lot of times you will get a at least a temporary, maybe a pullback. Okay, so to me it does indicate somewhat of a dangerous, risky market because you are overheated, but it takes a few days to maybe work that off, which I think is what we're doing here. So you can see it's a pretty, you don't get a whole lot of these signals or warnings, if you will, and that's really what they are. Is they're capitulation warnings. Okay, as an example, this was one in November, I can't talk, September of last year. This is the last time that we had a +7 reading. It was in January of 2014, the day after, I think this was the day they cut rates, January 22nd, 2014, a surprise rate cut, if I'm not mistaken. But what happened, that was 2015, not 14. But what happened was you had 2 days of pullback, and then the market went to a new high. Right? You can see the negative, Now, it is possible for there to be, doesn't happen a lot, but it is possible. This is the financial crisis. You got 2 in a row. You can even see after that you got a nasty pullback, but that's, you know, kind of an outlier. Here's one, 2010. I mean, it is possible for you to get like a runaway market. Like, for example, this would have been a negative extreme, but then the market kind of finished itself with a couple of consolidation days and the market fell apart, right? So it doesn't mean that you have to have a deeper pullback, right? So the risk to me is still higher for dollar CAD, especially since we've got that 3103 spot to pay attention to. So I hope that makes sense. Wesley asking, do I think dollar CAD can pull back from here to get long? Yeah, sure. And the reason is because I just talked about, that, you know, just talked about the extreme indicator, right? So that's the setup. Now, there are other methods to get long. Let's say that you break out. Let's say you never pull back to 31, you know, 05 or whatever, 3103, 3110. You know, that say you never pull back. Well, if you don't, you might get something like this. You've got the 200-day average and the high right here. Okay, 3260s. This was, I talked about in last night's piece, the zoom and retest trade, right? And what that looks like is this here. Okay, so during a trend move, you'll get, the market will be around the median line and it'll zoom higher, right? Rips higher. Okay, now this median line, because it was such good resistance, is something that you'd look for support, to provide support. So if you broke out, you zoom higher, you get the retest. That's something that happens a lot of times with median lines, right? So this actually is a median line technique. But if you think about it, it's just, you're just looking at resistance or support where there was former resistance, just like anything else, right? And just like a horizontal level or whatever. Okay, so you'd be looking for this breakout and then a retest, and then the market can continue on its merry way, right? So that's the zoom and retest, you know, trade setup, if you will. All right, let's move on. Dollar Swiss, I mean, I don't have really much to say here about it. If you do get higher, if we do bounce again, I would watch for resistance here. The close of that day, which is 9-1, that is your, as you know, daily reversal resistance, which is 97.99. I really will leave it at that. I don't have much to say about dollar. So dollar yen, we did get a rally. This thing might be a complete disaster until we get BOJ. I mean, there's going to be all kinds of rumors. It might be best to not really screw with this thing. I will say that, look, this is still resistance. The trend line 103.40 area, what's today's high? 103.35. 42 is the month open, and you've still, I'd still look at support in that 102 area, right? That's a lot there. Brexit, BOJ, and the crappy ISM number. They're all high volume days. question here from Mark Lavender. What's up, Mark? He goes, what's the difference between zoom and retest and a false breakout? Well, a zoom and retest is not a false breakout because it just comes back and retests the breakout. So, again, so like a false breakout would be this. This is a false breakout would be here, and then the market falls apart, right? You have to have an invalidation level. So, a false breakout would be if you do that, if you break out and then you kind of maybe come back and close back under, a specified level. Month open would be a good one, right? A retest is just, you just come back and retest the median line. So that would be the difference between those two things. I'm going to look at crude here. Canwall really wants to see crude. We will definitely check it out. Hold on. I guess it's a good time to look at crude, considering we just looked at dollar CAD for a long time. Take a look at crude here. Okay. So I wrote a thing a while back about crude. Where are we here? It's on the front page, actually, of our website. So basically, I think the crude could fall to a 35 handle, right, by November. Okay, so if you're looking at, yeah, this is it. Okay, so we're looking at the, the analog, comparative, whatever you want to call it, from 1990 to 1998. Generally speaking, the decline, big decline, okay, kind of sideways to higher, okay, fits, and then big decline. Now, I think the big long-term low is already in place for crude oil, but you might not be able to really go higher until you can finish the time element of this, which sends us down into, November, mid-November of 2016, which is actually interesting because it lines up with the election. So trading-wise, that puts me kind of in a position to scout out, I guess, resistance, and broken this trend line. So here, let's go to the mid-November time kind of puts you over here. So you might end up making a channel, right? You might end up getting a channel, getting down into this region. 35.81 is 618. The Doha area low is 35.22. So it fits really nicely. So I'd be looking for Canwall and anybody else. I'd be looking for resistance, probably the top side of this trend line, or sorry, the underside of this trend line, excuse me, for crude. So crude's already broken down, okay? And I would be looking for any bounce to fail, probably at this, 44.78 or so. You do have potential support from a trend line here around 43.30. Resistance is on this line here. Okay, so I hope that helps. Essentially, I'm bearish crude oil until probably $35, and any bounce would be viewed as a selling opportunity for crude oil. Okay, let's get into some of these crosses. Yeah, I'll take a look at gold. Give me a minute. Some of these crosses here. Let's see here. So Euro Aussie, question there. Euro Aussie, you remember the long-term level here, median line, blew through that. This structure here, $200-day average. You might get a pullback here actually. Okay, so this is this is resistance for Euro Aussie. Any dip is going to be a buying opportunity here until noted otherwise, but Euro Aussie is at resistance. And again, this is the 200-day average and this structure, right? So this 75% line was actually pretty good resistance back on 819. Have rocketed higher from 9.8. I would expect some consolidation. Again, probably nothing more than a pullback. I would watch the median line here for support over the next few days. And it would probably be around 49, 30 or so. So about 100 pips lower on a dip, and then I'd start to look higher again in Euro Aussie. Okay. Euro Kiwi is one that we've followed this week, and I hope you guys and gals understood what I was talking about with the bullish engulfing pattern. You had a real bullish engulfing pattern here on 9.8, and in FX you can really only have, well, in any market you can only have a bullish engulfing when you get a gap. So I mean, you could call this one a bullish engulfing. It is a little weird. It's kind of the vagaries of it because you get you have a, maybe it's the spread or something blows out and that's why you have the gap. But I guess you could say that the real bullish engulfings or bearish engulfing patterns can only happen over the weekends, because again, you do need a gap for them because you need the open to be below the prior close and the close to be below the prior open, or vice versa. Anyway, we've hit resistance. We've pulled back here a bit. We have held the level we were looking at for support, which was 53.90. So you could get some consolidation, whatever. But again, Euro Aussie or Euro Kiwi based, kind of on both Euro and Kiwi. It's a pair that I think you want to look higher in. Euro CAD has followed through today, and again, the 50-20 area is where we're looking here in Euro CAD. But you could get a pullback. If you do, it's a buy, and it's the former range high trend line breakout, which is 46.80s. Okay, so you could get a pullback in EuroCAD. If you do, it is a buy for a run at 50.20, maybe even higher. Pound yen, Kelly, I was actually going to talk about that right now. Funny you shall ask. Pound yen. So here we are bouncing on this trend line, right? And we might continue to do so. I thought it was interesting that if you draw two equal legs down, okay, if you draw two equal legs down in pound yen from the high, you get 33.32, okay? 33.32 is really close to the Brexit low of 33.18, right? So maybe pound yen gets back to the scene of the crime at 33.32 or so, and then it can go higher. if you're shorter term, nimbly type of trading this, it might be fine. You might be fine worth just kind of paying attention to these lines here on these charts. This, again, just the trend line from the 715 and 721 highs. I mean, the market continues to bounce on it. But this is an impulse, okay? So you're going to get an opportunity, in my opinion, to buy pound yen for something quite special. And it might be down at 33.30, okay? Just saying, with the two equal legs thing, something that is obviously quite common in markets as far as not the best looking trend line here, but yeah, the daily's better. So that's what I'd look at. Watch, you got the month open here at 35.83 and the week open at 35.97. So essentially 136 right now, Kelly, is kind of resistance, right? And I would, really short term, it might actually be okay to sell into it. 136 with stops above today's high, considering you do have quite the bar here, the wick. Okay, it could kind of goes against the British pound idea, but again, don't forget this is mostly yen, right? So if dollar yen wants to screw with everybody and go, back down here at some point, which it might do anything, it wants. I don't have much of an opinion on the yen at this point. Then yeah, this is going to get hit. Okay, so it's that simple. As pound continues to rally, as you can see, this is not a dollar market. Things are all over the place. Kelly would love that 33.20 than 1,000 pips. Yeah, me too. I would too. I think it'd be awesome. Took like 500 pips out of the last one, but let's see. Pound yen, if we look at pound yen, not much of an analog to really follow here. I have to go back and look at it. This is not even valid anymore, so get rid of that. If you remember the thing I'm looking at, basically you're talking about, what is this thing? We're looking at kind of, the way that this is a much bigger version of this, but that's kind of what I was looking at before, right? So you can kind of see here, we had it, so it was kind of more like to scale, right? Because it was going faster than the previous. It's going more like this, right? Where that matched that, and that matched that. So this could be still something that works on the timing aspect. In other words, top's a little late, or the top here is early, but the next thing in the queue here looks like it would be about 920, 921 as far as the next timing for a low, which I think if you actually look at this, it's 920. That's September 21st. September 21st is right there, and September 21st is next Wednesday, and that's both Fed and BOJ. Holy crap. All right, so write down 133.32 for next Wednesday. See if we get that. Mark asking, do you use IdoSearch? I mean, it's a combination. I'll look at IdoSearch, and I also just look at the charts. It's good to print them out, actually, and kind of look at them, not on a screen. I find that helps works quite well. So So yeah, it's a combination of just kind of human eye and using IDO search. Oh, EuroCAD and Euro Aussie. So with EuroCAD, I would be looking at 4680s. Okay. And if we get that, it might mean that we actually end up getting that that euro dollar flat pattern where we get to move lower again. With Euro Aussie, I would be focused on support on this median line near about 49.30 or so. Okay. So call it 48.90 to 49.30. Give yourself a range. Okay. All right. Okay, so I got to wrap it up here. I know someone wanted to take a quick look at gold. I don't have much to show you on gold at this time. I will just do a very quick gold here, gold. I think gold is actually, so the 2011, 2012 trend line, okay, we're still there. It's been there forever. You could end up getting a move down to 1260 would be great. You could get ABCX would get you 1280. 1260 is the level on the chart that I'm most interested in. It's the median line that launched the big move higher. However, because you do have a higher ceiling, you can see highs up here, okay, as opposed to on this, you should probably be looking for a higher floor as well, which means I would probably be looking on this line, which is the 25% line, or sorry, 75% line, which essentially crosses the Brexit low and would put you a little closer, you know, to, well, not that far below this low. So, you know, put you near 1290, maybe 1280, because, you know, you can, let's see here. Make a clone of that there. Okay. So if you get the next year, it's like 1285 or so. Okay, that would be, I think, the big area to watch for gold. Silver is actually cleaner right now. And here's silver, you know, median line, okay, just above the median line. So silver, your support is, you know, 1850 or so. You know, that's what I would really watch for in silver. All right. All right, so I'm going to wrap it up. Get this archived. And just an FYI, I'm not going to be around tomorrow during the day or Friday. I will obviously post the swing update tomorrow, but I will be traveling, so I'm not going to be like, you know, blowing it up on Twitter or anything like that for the next 2 days. Not sure how much action there's going to be in the next 2 days, but we'll see. Again, we got the FOMC and of course the Fed next week. So it might be one of those things where the market's kind of waiting and waiting, but whatever. There's the ideas that I like right now. Kiwi is one of them, short in it. Aussie, or sorry, dollar CAD higher on a dip. So those are things where I'd just be placing entries and whatnot probably anyway. Other than that, have a great rest of your week. And I will talk to you folks next Wednesday. All right, so take care. Have a good one. Bye.